Hey, it's Randy Patrick here, Short Sale Cash Connection for Friday, the 1st of June. The year's just going by. A couple of things. I'm wearing glasses because I look at my computer all day and I can't see what I write in paper, so that's a sign of getting old, I guess. And also, I'm out in my lanai, where the pool is, and I got conservation behind me, so if you hear all sorts of noises, it's the wildlife, the flora and fauna of living in Florida here. So there you go. Anyway, Scoop, today I just want to talk about a few things, where the housing market is at. All right, we all know, and also my master plan in theory of where things are going and what we can do to take advantage of it. So we all know that we're suffering from what? Low inventory. Okay, not enough stuff out there. Builders can't build fast enough. Not enough resale homes and trade-up homes coming on the market. It's tough. Okay, high prices. Obviously, as a result of low inventory, prices rise. There is competition. Okay, competition between retail buyers. Now, also between investor buyers, and the both are cross-pollinating. So we have people who are looking to get any property just because they need a property to live in. So it's becoming quite serious now. When there's competition, prices rise, and what happens in the end, we all just pay more. Whether it's for retail homes to live or investment opportunities, we all just pay more, which is not a good thing. So interest rates have also gone up, which makes it harder for people trying to buy homes, their first homes, whatever that may be. Obviously, when interest rates go up, your monthly payments increase, which means your debt-to-income ratio increases. With prices going up, it also means that the down payment you had saved last year is less on a percentage basis than it is now, so that hurts people, which means that they have to move into higher price mortgages, low down payment mortgages, higher risks, the whole bit. So you can see how this kind of sort of starts the process here. An economist I like to follow, I watch his videos and I listen to him, and I watched this morning. He basically states unequivocally that we are in a bubble right now. It will be worse than the previous one. It's going to start from the top and work its way down. And he says if you're looking to buy property, don't buy property. Now, clearly, if you're investing and you're finding deals, you're getting great prices because you're direct to the seller, go right ahead. But if you're looking to buy property now, a retail or buy and hold, be careful, or just wait it out, because it will shift. It will be cheaper. His advice when everything shifts and things become cheaper is to buy affordable homes. Buy as many as you can and rent them out to the people who need to live, the other demographics and generations like the millennials that can't buy or not ready to buy, and rent to them until they are ready to buy, and then sell to them, or do figure out some deal here. He also talked about second or vacation homes, having those as rentals and as short-term rentals, because other demographics like some of the baby boomer generations that will be retiring, etc., are looking to relocate and spend more time as snowbirds, or just have another place to live and hang out. So again, that's something to look at too, and those would be warmer states, southern states, sunshine type states. So good opportunity there. Now, here's kind of what I'm thinking, all right? I want to qualify this as, first of all, I'm not crazy, and I'm not a conspiracy theorist or anything like that. My point I'm trying to make, though, is the fact that I do believe there's a bit of a housing conspiracy going on right now. I've kind of mentioned this before, but I want to get into it right now. And why I say that is we're being controlled, and the institutional investors, the hedge funds, Wall Street, the lenders, the banks, political people, the ultra wealthy. Well, the game plan is to convert us all from a nation of homeowners into a nation of renters. All right, we can already see that home ownership's down around 62 to 63%. It's down 5 or 6 points from where we were before the peak, and that's because of the issues that happened with the housing crisis. So as properties increase and things crash, people who over leverage leave the housing market as owners and come back as renters. All right, that's why you see all sorts of multifamily things going up now. Is the fact that people need places to live, and they're moving, they can't afford, they can't get homes. There's a big push now. There's a lot of write up, a lot of articles on the future of single family rentals and where that's the place to be. So I look at it going, understand what's happening in the market and see if we could emulate that. All right, so debt's at an all-time high for people, student loans, credit cards, auto loans, the whole bit. People are getting marginalized, all right, and we have banking issues now, more than non-banks. Think the Quicken loans and these other people that are just doing mortgages, they're not doing savings accounts or checkings accounts. Well, they've lent a ton of money for home mortgages compared to the traditional banks, all right, and they are structured a little differently. They're not, I guess you could say, as protected like the other banks are with the government. It's raised liquidity issues, and they're going to be on their own and more exposed if there are issues with respect to people defaulting down the road, etc. So that's something to talk about in the future. Subprime lending is back. It's back with a vengeance. No longer called subprime. It's called non-prime. I guess it's supposed to make us feel better about those loans and not get alarmed by it. But its growth is huge. They had a big growth last year, and it already doubled for the first quarter compared to last quarter of this year, 2018 to 17. So that's growing, and there are lenders out there right now that have just come out and said, we're going to lend to the people that can't get traditional mortgages from banks, which is sort of what subprime was back in the day. So low credit score, issues with respect to not having bank statements, self-employed, bankruptcy, short sales, all those type of things that are credit blemishes, or and again, not implying that people who are self-employed, can't get loans, and it's just different perspective here, obviously. But my point is that that's coming back now. So the funny thing about that is that subprime is coming back strong just when the market is at its peak price, okay, which is very alarming if you think about that. So why is subprime making a huge push when the market's so big and such a high value? And also the subprime loan, I guess you could say whatever you want to call them, components, they've raised the loan value in subprime to $1.5 million. So there are people who probably have lower credit scores and aren't as strong buyers can get a loan for $1.5 million. That's something to think about. All right. So here's the scoop. So that's where we are today. So Dodd-Frank has been repealed to a certain point, and we'll learn about that more as time goes on, which means a lot of the restrictions for smaller banks to get into lending will happen, which means more loans will be generated, probably to people who in the same boat here. Now, hedge funds don't buy at the peak, all right? So if you recall back in the day, when everything kind of hit its bottom, like 2011, 12, 13, the hedge funds were out in full force buying as much as they could. They don't buy at the peak. As a matter of fact, they buy only, discount distressed properties. They're not out buying properties that are valued where they are today. So they're buying less, which means they can't put people, in there. They got all this money they're sitting on. They can't move their cash. So they want the crash to happen so they can start their buying process all over again. And again, a hedge fund's not going to buy at the peak market. The cash flow over 5 to 7 years doesn't make sense. They got to buy when it's a lot less. Okay, so we understand that. So I guess the powers that be, the hedge funds, Wall Street, the bankers, politicians, whatever that may be, the ultra wealthy. So we are allowing this crisis to occur and happen again. If you look at what happened 10 plus years ago, all the signs, they're there again today. Okay, almost verbatim, almost exactly the way it was. So, but nobody seems to care. It's almost like we know it's going to happen, and we're going to let it happen, and we're going to repeat this process all over, which is fine as long as we know what to expect and how we can take advantage of it. So again, the market will crash. I don't think they're intentionally crashing the market, but things are being set up to allow people to have it crash, and who's going to take it on the chin? It's going to be the homeowners. There's everyday people like you and me, not the investors. All right. So how do we insulate ourselves from this phenomenon and earn money now and in the future? Well, I'm going to go to this, and you know what I'm going to say, but I really think it's important. I'm going to tell you why. It's short sales, okay? And here is why. Well, here's the deal, is that they're available. They're everywhere, but nobody is doing them, all right? Nobody seems to care about them. Nobody is doing them, and I'm going to explain about this in a second here. Again, that bird is making huge noise in the background here, so I can't help that. But so I'll give you an example. In my county, where I am, okay, in the MLS, the multiple listing service, there is over 5,000 active listings in my county. All right, I live in a pretty big, populated area of Florida, and that's probably 2.5, 3 months worth of inventory, believe it or not. That's the scoop. Now, if I take those 5,000 plus active listings and I say, okay, let's segment what are the active short sales out of those listings. Do you know it's about 1%, just over 1%. So I pulled 60, all right? So about 1% of the active market is short sales. So what does this mean? It means a couple of things, okay? It means, first of all, the real estate market, or the realtors, the real estate agents, are not going after them as a market. Why? Well, because it doesn't make sense, because of it's too hard, too much work. We may get our commissions cut. All the stigma and issues that occurred back in the last housing crisis have left a bad taste in people's mouths who were involved in the real estate business, which is understandable. A lot of new real estate agents come on the last, say, 5 years because, again, when the market picks up, people jump in, more investors come on the market, more agents come on the market because they figure I want to get a piece of the action. Well, all these newer agents have never done a short sale, have no experience in short sales, so they're not going to go after it because they have no idea. And the people who are maybe more mature in the marketplace and have the experience are telling them, don't bother, you don't have to do that. As a matter of fact, a large brokerage firm, I've talked about this before, a large brokerage firm that we did a lot of short sales for back in the day, he's probably got 12 offices, 1,000 plus agents. He's blatantly said, ignore the short sale market, go after the listing market because the prices are so good, we don't need to worry about that. Well, that's a great for now, but it's going to hurt, in the future. So that's my whole point. And the investors, well, investors aren't going after them, right, for the same reason, because they're too hard, or they think they're too hard, or too much time, don't have the experience, don't know what to do, and also, like, it's unknown. So if it's unknown, it's downplayed, all right? So people don't know what to do, so therefore they're not going to bother. Also, homeowners, so you got the real estate agents not doing them, wanting to get involved, investors not wanting to get involved, or actually being told by other investors who are talking flipping, fix and flip, whatever it is, products, to analyze deals or to find sellers, whatever it is. I mean, I listen to the webinars like you do, and they are actually being told to, stay away from short sales, or don't worry, we're not talking about short sales, as if it's a bad word, all right? Well, people don't know, and I'll tell you why it's going to be an issue for the future. So, and now the homeowners are locked into their property, but they're unsure what to do. So they're not coming to the surface and going, I need help, because the real estate agents aren't going after them, and they don't know what to do. They talk to the lender, they get some advice that's probably not in their best interest. They sit there, they do nothing, they may react at the very last minute when it's too late, they lose their home to foreclosure. And what happens after foreclosure? Well, guess what? It's bought at the auction by hedge funds or other large investors, okay? Or if it doesn't sell at the auction, it goes back into the lender's inventory, and you think, oh, this is going to come out as an REO. I'm going to get a chance to work on this in the future. No, 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 no. Because like the short sale market, the REO market, very few REOs actually make it to be listed where anybody can buy them, which is a problem in itself. A lot of the market is being sold back and forth as non-performing loans or assets between lenders and hedge funds for hundreds of millions or billions of dollars. You see Fannie Mae and Freddie Mac, typically Fannie Mae, selling pools of $1 billion worth of loans to somebody else. People bid on them. So you see people are washing their hands of these problems. Now, it goes to a hedge fund or institutional investor. Guess what? They're not doing short sales. They want those homes. They're going to find a way to get them back themselves. So it's a whole different ballgame here. So, and again, how I can support this is the fact that I know what's going on in the industry. I see it in my own backyard. I was communicating with another short sale guy that I've known for years. We were in masterminds together in the whole bit, and he's feeling the same thing. It's basically the volcano starting to simmer, and that's not a great analogy because of what's going on in Hawaii right now, but it's almost like all this pent-up frustration and volume of the shadow inventory sitting there being controlled, and it's not coming to the surface, and it's going to burst at some point in time. So my perspective is I want to be ready when it bursts and start work on it now, all right? Also, I can tell you people in my real estate investment club, I got a little real estate investment club here where I live, and the number one issue is that, well, I can say that the majority of them are not doing deals. And why is that? Well, very straightforward, because they can't find them. That's number one, low inventory. And second, if they do find them, it typically is not direct to seller. It's from wholesalers or other people who've got them under control, and they're sucking the margin out of those deals. All right. So, you want to do something, you can't fix and flip this because there's inflated ARV, there's lowball rehab estimates, and the margin, because of the lack of deals, I guess a wholesaler has to get as much margin as they can out of the property. So they figure they'll run it until somebody buys it. So that's kind of the situation here that we're looking at. So a lot of stuff on the go. So just want you to be aware of that. So it's a common element. We're all facing the same thing. So again, don't get caught up in the frenzy. Don't buy when it doesn't make sense. If you don't feel good about your purchase, you probably shouldn't do it. That's how I look at it. So, and again, let's talk about bubble theory. So bubble theory 101, very, very straightforward. Bubbles get bigger, right? Oh, that bird just won't shut up. I'm sorry. So, and anyway, sorry about that. But so bubbles get bigger. People get numb to the experience of what's going on, and this is the new norm. The longer properties appreciate, the faster things grow, becomes the norm, and we get numb to. We don't realize what's playing out here. Okay, and then there's the fear of missing out. So if I don't actually buy a property today and jump in the investment business or get a property, I'm going to miss out because it keeps going up. I'm going to miss that change in value, that delta, and I'm going to lose money or lose my opportunity cost or not make money, whatever that is. So people have the fear of missing out, which is really not smart here. So then it's too late because they've overbought, they bought incorrectly, and now they're stuck with the situation. So remember this, okay? Bubbles never deflate. They don't just go away. But bubbles never just sort of disappear and we start over again. The only thing they can do is burst. and they burst. And when they burst, they usually fall back down to where it started, or even less than where it started. That's the point I'm trying to make to you. So, all this gain we've had in the past, say, 5 years, a lot of that's going to go, especially in various markets, because of the situation we're in. So please be aware of that. So why am I talking short sales? Because for a couple of things here, okay? I look at short sales as the new supply of inventory. So what I told you in my market, and I've checked other markets as well too, but this is just indicative in one county. I can talk about way more counties in the areas where I live and work. But my point though is that if only 1% of the market is active short sales, I can tell you that in my where there's 5,000 of those listings and 1% is short sales in the same county, because I can pull the statistics, there is probably 5,000, 7,000, 8,000 people minimum not paying their mortgage in their house, doing nothing and just sitting there waiting. So those are all potential deals that we could be getting our hands on. They're doing nothing. Call it the shadow inventory. I don't know what else you want to call it. It's a component of the shadow inventory. So people are just biding their time. They're not selling their house. They're not leaving their house. But some of the people have vacated, of course, but they're just sitting there not knowing what to do. That's the inventory. So that inventory, if it hits the market, solves all of our problems, quite frankly. And properties move, people buy and sell, life is good, you can make money, etc. So realize that I think short sales really is an opportunity to supply inventory if we do them correctly. All right. So it's a supply for both retail and investor. Because again, when you go back to the day when we had last housing crisis, many retail buyers persevered the issues and purchased short sale properties. That was part of the deal as well too, as well as the investors. So it's not like it's not been done before. And if you know the routine, you can do it quite effectively. So my point is to do them now, get involved with them now, before we start seeing major shifts and a major crisis coming in the next little while. And what that allows you to do is, number one, gain experience, gain knowledge, get some deals, get your name out there, get the process under your belt, figure out what's going on, and then as stuff really starts to fall and become chaotic, you're already in play and you already have a process, a system, and know what to do, and you can just jump on these deals as a leading expert or someone people are going to go to in the future. I took a call this week. Some communication was led to a call, and it was somebody who saw my profile on LinkedIn. And the reason why they contacted me is because somewhere in my profile, I think actually right there in my profile, I say short sale expert. I've had that in my profile since 2008 or something like that, okay? But the reason why I was contacted is because this person is feeling frustration in the fact that he can't buy property because of what I said. Low inventory, high margins, wholesalers being ridiculous on what they're asking for and saying ARVs are here and rehab costs is here, and it doesn't make sense when you look at the deal. So he's thinking, well, I got to go someplace else where I don't have that issue. So that's why short sales is good, because number one, you don't have competition for deals. I've just shown you that 1% of the market means no competition. People aren't doing them. People don't know how to do them. People are scared of them. People are ignoring them, which is the best market available. If everyone's going over here, let's go over here and get the short sales. That's kind of my point. With all these emails I send you guys, my communications, that is the point I'm trying to make, is that nobody cares. When I do that 1% of the market where I live is short sales. And I know there's thousands out there. I'm trying to get my hands on them. I'm marketing. We're doing all sorts of things to try to get our deals going here. That's the point, though. It's sitting there available, and no one's trying. So that's the scoop. So again, no one's teaching this out there. Well, put it this way, you're always going to find people talk about foreclosures, but they're not really. I listened to a foreclosure webinar earlier this week, and funny enough, it talked about the foreclosure process and how to, and pre-foreclosure. It doesn't talk about short sales. It doesn't talk about how to manage them, how to do them, the strategy behind them, and what you can do with the property, like we can. All right. So again, I want you to understand that. So no one teaches that. I teach that. All right. And I know how to speed them up and how you can make money on them without actually ever buying a property. It's all about control. Short-term rentals, fix and flip. There's just different ways, pre-flipping, different concepts, different ways that we can work with short sales to have this happen, okay? If you're into fix and flip, great. You don't have anything to fix and flip, do a short sale. Now you've got a property, okay? So realize that short sales, not every short sale is a pretty house. As a matter of fact, most of them are not. And that's your fix and flip model right there. So there's things that you can do. You can sell these, you can there's techniques I can show you that you can make money, and as I said, not even touch them. You just control them. All right, that's the way. And our buyers are who? Hedge funds, all the people I mentioned before that want to control the market. We can supply them. That's fine as long as we know what the game plan is. All right. Now, also, what's so cool is that there's new issues for homeowners. What I mean by that is lenders are much more aggressive now going after foreclosures, and when they do foreclose, securing judgments against sellers and going after them aggressively. There's more about that in some of my training, but again, the whole point is people who think foreclosure wipes out their debt associated with the property, they are mistaken. It doesn't happen that way. They'll be tagged with that debt. The lenders are way better off with their systems, with their staffing, all their knowledge. Everything that they can do now as opposed to 10 years ago is better, and they will come after people, and they will secure judgments, and they will garnish wages, and they will get their money. They're set up for that. I can talk to you about what our attorney has dealt with previous clients and their impact, that impact on them right now. Okay, so basically, that's my point here, is that I want to convey, and I know I've talked to some of you, and I still have to get to some of you, just have been busy, and I'm trying to do things here, but realize that's where I believe the market is headed. And if you're thinking, well, I'm just going to flip, I don't like short sales. Well, my question to you is, well, how many properties are you flipping today? Okay, if you're in the same demographic as the majority of real estate investors, you're not flipping a heck of a lot, okay? And that's not an insult to you, it's just the nature of what's out there. If you're smart, you're not going to flip things or buy things that don't make sense, okay? If you're direct to seller, all the more power to you, and then you can certainly do some good work out there. But my point is, if you're having difficulty now, look at this market as an alternative market that no one's in, no one's touching, no one cares about, no one knows about, no one even knows how to approach it, but there are deals to be had. Thousands, okay? There are still 5.25 million people underwater with their mortgages across the board. Believe it or not, we have natural disasters that have happened that are going to cause more and more short sales and pre-foreclosures to hit the market. And again, we're already into June now. Hurricane season starting again. We're going to see more of that. We already know that we're going to have an above average active storm season, which means more of this will happen in the future. So think about these things. Think about the future and kind of go, where do you want to position yourself? Where do you want to build your systems? Where do you want to get involved in and learn the business that can help you, number one, earn income and build wealth? I'm going to use this as both earning income from deals I'm going to really flip to other people, so to speak, and I'm going to have a model where I'm flipping four, keeping one to build up my real estate portfolio, because I'm going to be buying them at the best price available with no markup from a wholesaler or somebody else. I get to control them, I can figure out how to work with them, and I can decide the best strategy for each property to make the most money. That's the whole point. So again, if you have not downloaded my report and perspective on the housing bubble, housing crisis, please do so. All right, you can click on various links in the emails I've sent you and do that. If you don't have it or want it, just email me directly. I'll just email them to you myself, okay? If you haven't looked at my little report that I included in a couple of emails as an attachment about the reasons why you should be doing short sales right now in the marketplace and why it's so much, all the benefits to it, do so. If you don't have that email around, email me. I'll send it to you as well, okay? So read reports, understand what the market is. If you want to discuss short sales, and you'll be seeing some stuff from me in the next week or so as I sort of launch out my service and my product. Again, it's not really a sales call, but it kind of is. I'm just saying that, obviously I'm passionate about what's going on here. I have a lot to give and a lot to teach and a lot to share with people. A lot of stuff out there, but I really believe when I look at the marketplace and I see what's happening or what's not happening, the opportunity is huge in this field. It's not rocket science. It takes a bit to understand them, but it's a market that's not touched, untapped, ignored, that has a ton of inventory waiting for people to jump on board. So please give it a thought. You can communicate with me. You can talk to me. We can go over things. I'm happy to share my thoughts. I've talked to a lot of you one-on-one to help you get over the edge, to do short sales, and to show you why it makes sense. So I'm always here. I'm a very open person. I like to talk and chat, and do the best I can to help you out. So again, appreciate your time. This is a rather long video, but I wanted to let everybody know it's my perspective on the overall things. And there is a method to the madness, and I think the future dictates that this is a really good opportunity, again, in a market that's not served and has a ton of inventory. So take care, guys.